Hey guys, the stock market has been on fire the past month, and our portfolio the past month is up nearly 10% or nearly $4,000 when we combine all of our portfolios. So, in this video, I'm going to share with you all of my portfolios, my goal with each different portfolio. Like, this is my pretty much buy and hold forever account where once I buy a stock in here, I try and never sell it. We have our dividend growth portfolio right here. We're up 2.82% the past month in here, and we just own a lot of dividend growth stocks in here. We also have a Roth IRA we'll be going over. I'll share with you some of the dividend income. I'm going to be showing you what some of my bigger winners are, some of the bigger losers. And if you like this kind of stuff, please do me a favor, drop a like on the video for me. I'd really appreciate that. I'm definitely not an expert. This isn't financial advice. I'm just a college student who loves stocks. So yeah, let's get straight into the stock portfolio update. So let's start with our risk on portfolio over here. The past month, we're up $1,600 in 1 month in here. And I like looking at the return money weighted. So what that means is if I go and deposit $100, this is not included in that. It only includes the gains you make on that $100. So that $1,500 profit I've made in the top left there does not include if I've deposited any money. Same with this one over here. I like looking at the return money weighted. And as we can see, our Moomoo account as well, we're up 10% in the past month. What about year to date? Dang, we're up nearly 20% year to date. So when you're an individual stock picker, you got to make sure you're outperforming the market. But anyway, let's go look at this right here. So here's kind of what we've done in our Webull account. Here's our trading P&L. Now this says trading. I haven't realized any gains or losses. Like if you look in the top middle there, we've actually realized negative $78, but that's it. We haven't really done any buying or selling. And here are some of our bigger winners the past month. Dave's been doing really good. AMD, Disney, Toast, and let's see, are any stocks down? So yeah, Enphase Energy, Molson Coors, and Krispy Kreme. We're down $4 on them. So anyway, it's good that our portfolio is doing great. And we also have some dividends that we had. Main, yeah, dude, this one stock right here made up most of the dividends. Or all of it. I love. What about year to date? How's the year to date dividends? So we have $69 of dividends year to date. But anyway, let's go look at what stocks I actually own here in my risk on portfolio. So here are all the stocks I own in here by order of the largest stocks to the smallest stocks. So our largest holding in here, we got, some losers in here, UiPath, but Disney's been holding up its weight. Ticker symbol Dave has done really good. And it's all just like the past couple months here. Look at that. This stock was priced for bankruptcy. It was just $5, 2 years ago. I bought in at 78, and then a couple days, I bought all my shares right here. This is just such an incredible growth company. I mean, if we just look at the growth of any metric right here, I mean, the free cash flow per share, the revenue just hits a new record every quarter. Dave deserves to be at where it's at today. So that's a cool one. AMD, of course, has been kind of slacking, but with the Nvidia earnings, they're definitely up from their bottom. Look at that. They bottomed down there at 76, and now we're over 115. So AMD's actually has had a nice little recovery in there. My actual newest purchase in here, my newest stock that I've bought is actually ticker symbol FUTU. This is my only Chinese stock. So this company is Chinese, but I don't believe the fundamentals. They just did a special $2 dividend, and check this out right here. If we just look at the fundamentals of this right here, I mean, look at that year-over-year growth rate. The revenue's up 81% from the previous year. That's a record revenue. Revenue's at a literal all-time record, and same with the net income. The margins on this company are phenomenal. I mean, 45% net margin with this company, $2 billion in net income. So FUTU, that's my most recent stock purchase. They are Chinese. And we have Main right here. This is the largest chicken egg producer in the US. They have a 20% chicken egg market share, and they just paid out a crazy dividend, as we just saw. Look, $3.50. Well, the stock price is $98. So I got 3.5% of my money back instantly in 1 quarter. They change their dividend every quarter based off how much they're making. I have too many stocks for me to go over. I'd love to go over all these individually because I have so much to say about all these stocks. Our largest winner is actually Robinhood, and sadly, I took a lot of profits on this company. Look, if you see, I sold at $36. Look where I was buying though. I bought some shares at $8, $9, and I can't believe this. The stock is $75 today, and unfortunately, I sold most of my profit at $36. When I was up like 180%. I think I took most of my gains at 180%, and here it is today up 400. So sometimes you got to let your winners win. You never know. I do think Robinhood is overvalued right now. I mean, we'd really have to see their like crypto transaction revenue just like explode. But anyway, I really like Robinhood. I'm not going to take any more profits on them. I'll keep my 5 shares in them. But we also have some other stocks like SoFi. They're a really nice, growing, profitable fintech. Sprouts Farmers Market has been an incredible grocery store. And the grocery stores, they're a really low margin business. And look at Sprouts Farmers Market. They actually grew their net margin 32% year over year. Incredible. That's why I think Sprouts Farmers Market is doing so good. They just had a record net income quarter, record profitability. So I like Sprouts Farmers Market. I think Americans are going to like the healthier grocery stores. But anyway, yeah, that's all the stocks. Well, not all of them, but that's all I really wanted to go over here in our risk on portfolio. I love our performance. Oh, here's kind of the year to date. We're up 1,600. But anyway, now let's go look at our Moomoo portfolio. So this is my pretty much buy and never sell portfolio. Now, if we look at us year to date, we were just up we were up 20% year to date, which is pretty incredible. And most of that is from 2 stocks right here. So the first stock is Comfort Systems. We just dollar cost average into this one on the April dip right here. We even managed to get some shares at 280, and we're now up nearly 40% on that company. In just a month, we're up 40%. And our biggest winner, or not in terms of all time, but for the past month, our biggest winner has been Amphenol Group. This company just had a huge deal with NVIDIA. NVIDIA's ordering a bunch of copper cables from Amphenol. So that's a kind of a cool partnership. Anything NVIDIA news will make the stock go up. But yeah, I love this company right here. We bought them also on the April dip. I took advantage of the dip, bought this company, all my shares at $60, and well, it's $90 today, and they deserve the growth. I mean, I expect this company to just keep on going up. Look at this revenue growth. What other company is growing their revenue 47% from the previous year? I mean, that is incredible growth. They're also a niche company. They have very diversified revenue streams, but look at their communication solutions revenue. It's up 43% year over year, and also their harsh environment solutions is up 39, literally to a new all-time high record. So Amphenol Group is a great one. They have a small dividend right now. Since the stock price has gone up so much, that makes the yield go down. They only have a 0.7% yield, but still, that's been our best performer. And actually, our newest stock we've bought in here, and I bought another share of them yesterday, or the second last trading day, was Coca-Cola Consolidated. I think this one's at a very fair valuation. If you kind of look in the top middle, the PE is a 17. They trade at 17 times net income. That seems pretty fair. And check this out. Look at their dividend. This is what's so cool. They have a 0.55% dividend. I get it. The yield is really low, but look at the payout ratio next to that. The payout ratio is just is 5%. I mean, that's literally nothing. And let's compare that to an Apple, for example. This is what I kind of like to just compare it to. Apple has a lower dividend yield, a 0.49% yield, and triple the payout ratio. They have a 16% payout ratio. So Coca-Cola Consolidated obviously isn't Apple, but they have a third of the payout ratio with a slightly higher dividend. So anyway, that's my most recent purchase. I think they're going to be a great dividend grower. They're the Coca-Cola bottling company. And the reason the stock is kind of been falling recently is because they kind of missed on their net income right here. The net income fell 37%, which is kind of normal. It's a bit cyclical, but still, this company, very low valuation. They print free cash flow as well. Coca-Cola is actually the largest shareholder. So if you own any Coca-Cola stock, you technically own a little bit of Coca-Cola Consolidated. Anyway, that's our most recent purchase in here. Obviously, we have some big losers. This is also a lesson. Like if you're going to dollar cost average into a stock like I did right here, look at that. Look at all the buys. I was buying this one every couple of days. You want to make sure you're dollar cost averaging into a high quality company. And that if you're an individual stock picker, you got to make sure you're picking up high quality stocks. And you can never foresee that though. So sometimes you'll have stocks that you do all the research on the world on and they'll still go to zero. So I'm not selling out of that company. Pretty much all of their market cap right now is just their cash on hand, which is pretty cool. Another update, DocuSign just reported earnings. The stock fell 19%. So on the most recent trading day. And that's what's where they triple beat on guidance. So look at that. This is what's weird. The orange line is what the analysts were expecting. They beat on revenue. They beat like crazy on net income. They beat even more crazy on their EBITDA, but they had bad guidance. And that's what hurts the companies in this environment, the bad guidance. So they only projected like 4% billings growth. And 4%, that's just not good growth. So DocuSign's a bit of a slowing growth company. So I think that's why that one's been hurt so much. And then finally, let's go check out our Robinhood portfolio. We have a Roth IRA and a main taxable account. And I'll show you the dividend income too. Let me show you that first. So here is all the dividend income that my portfolio has received, or this is our dividend growth portfolio. Again, a lot of these are dividend growth companies like Constellation Energy. The dividend's only $5. Let's go find like Meta. We get a $2 dividend from Meta, Google, $3 dividend. A lot of these dividends aren't that high. But what I do really like about this is the stock price appreciation. I can't believe this. Year to date, we were down 15%, and now we're green 2.47% year to date. Let me compare that to the S&P. So the S&P is up 1.75. So we're doing literally 1% better. But both of our other portfolios have outperformed this portfolio. But check this out. Here's our total percent change on every stock in here. I really haven't made any changes in here. I've kind of just been adding on to shares. Like I just recently bought another share of Meta. Like this week, I bought a share of Meta. If we scroll down at the bottom here, I was surprised with Meta. So I bought a share at 644. And if you look at the very top, that's at 698. It's nearly $700 again. So that's what I really like about Meta. And it sucks because my original shares I was buying, like look at that, May 2nd, 2024, I was buying my shares at 440, 450, and I just keep dollar cost averaging up because Meta is such a great company. Even right now, literally right now, Meta trades at 27 times net income. So I feel like there's still more upside potential. I can't sell this one at a 27 PE. I feel like this one could go to 750. I don't know. The other stock we've most recently purchased is United Rentals. I love this company right here. It's probably my favorite dividend growth stock right now. I bought a share at 715. It is at 706 right now, so we didn't exactly time that one too perfectly, but I love this company. #1 market share for rentals. We also have McDonald's right here. This is a great dividend company. I mean, we're getting a $23 dividend. Hey, that'll buy me a few Big Macs. Let's go. And this dividend's qualified. And actually, fun little fact about taxes here. If you make under $50,000, every qualified dividend you receive will be tax-free, which is so cool. If you want to live off dividends in the future, like me, I buy these qualified paying dividend growth stocks like a McDonald's. I get this $23 dividend. It's completely tax-free, no matter the state you live in. Since I make under $55,000, it's completely tax-free for me. So that's what's pretty cool about qualified dividend taxes. Our best performer recently has been Constellation Energy. So, like, look at this one the past 3 months. This company was going up so much because Trump signed an executive order to speed up nuclear energy reactors, and that includes one of their 3 Mile Island reactors. So that's going to help out Constellation Energy. Constellation Energy CEO was next to Trump in the White House when they were announcing that. So that's our. We have our largest holding right here. They're related to the home builders. They repair roofs. This is my second largest holding. I really like that one. They have bought back. You won't believe this. This company has bought back 9% of the company the past year. So you now own 9% more of the company than you did a year ago. So anyway, now let's go to our Roth IRA. Our Roth IRA is just a tax-free retirement account, and I think we just hit an all-time high. Yeah, so for the past month, we're up 7%. All-time, we're up 11%. That's mainly from InnoData right here. So check this out. This has been our hidden gem growth stock. Right now, the price is 51, and we got in at 33 on average. I've made a lot of videos about this stock in the past, so let me know if you own InnoData. That's a cool kind of dividend growth company, there's no dividend there. But these two right here are dividend growth stocks, or more of pure dividend stocks. There's not too much growth, but hey, this stock is up 60% the past 5 years. What's so cool about this stock right here, this is Main Street Capital. They're a BDC, and by law, they have to pay out most of their income in the form of a dividend, and they pay a monthly dividend. That's what's so cool. And they have a really high yield, like a 6% dividend yield. Yeah, if it says 5.13. They do special dividends and stuff, but you get a 5% yield here, and since it's in my Roth IRA, it's for sure going to be tax-free. They don't pay a qualified dividend. So if I own this same Main Street Capital here in my taxable account, I would pay, just 12% tax. Nothing too crazy. I'd pay a small 12% tax on that income, but I'll just keep it in my Roth IRA. We also have a real estate investment trust. They do triple net leases on grocery stores. Most of their tenants are grocery stores like TJX, Kroger, Publix, Ross, which isn't a grocery store, but those are their main clients and customers. But again, small position here, 10 shares, $250. So I have two high yielding dividend stocks, 5% yield on both of these stocks right here. And then we have our huge growth stock to kind of counterbalance that, to have that balance, some huge dividends and some nice growth stocks, because that's how, in our Roth IRA, I don't want to be fully high yielding dividend stocks. I want to have a little bit of growth in my Roth IRA. It's only $1,000, but I really want to try and increase my exposure over time. And what's cool about Robinhood is this match that they give you. So far for 2025, I've deposited $648, and they've given me for free, they match you 3%. Well, not for free, you have to pay $5 a month, but that pays for itself if you deposit $6,000. The 3% match pays for the entire Robinhood Gold plus all the other benefits. But we've gotten $19 as a match from Robinhood. So yeah, that was the video. That's on my dividend income. Let me know your honest thoughts. Do I own too many holdings? I think that's my one critique right now. I do want to narrow down the portfolio. I want to sell off maybe a couple positions in here just to have less holdings because I have like near 35 holdings or something. So yeah, and also check out my video up here. This is how I fully analyze a stock. And I get into the research here. This is what you want to be looking at when you're analyzing a company. So anyway, I hope you have a great rest of your day. It may really mean a lot if you drop a like on the video for me, and I'll see you guys in the next one. Have a great rest of your day. My name is Nathan Robert.